Good afternoon, everybody. So as always, a hell of a lot to get through in this video, but as always, a hell of a lot of information for you to consume and digest and take on board. So what I will say is thank you for starting to hit the like button on the videos. It means the world to me. But what I have noticed is that about 90% of people who are watching my videos are not subscribed, and that cuts deep, guys. That cuts deep. So if you would consider sharing the love and smashing the subscribe button, it would mean a lot. It would help other people see this material and help other people learn, right? So I'm sharing the love. So if you can just pass, you can pass that forward. That would mean everything to me, right? So that being said, let's jump into today's action and go through it. I'm going to start from London and go all the way through to today, and we have a lot to cover. So let's get straight into the meat potatoes, right? So let's start with this order box. This is where we started the day, and if we look at this price leg here, we were in a discount from yesterday, right? So this price leg here, we were in a discount. So if we just throw a fib across this range, you can see that we were in a discount yesterday. And we opened today just above it, right? So price is likely to do what? It's likely to go and rebalance the price by heading up into a premium of the price leg that is this price leg, right? It's going to go and rebalance this price leg. So at the London session, right, what are we looking for? We're looking for the 3 a.m. algo and the 5 a.m. algo as our time period of when to trade. So what happens here? At the 3 a.m. to a T, we break out of the weekly gap, right? We break out the weekly gap, and we are immediately going, our eyes should be drawn to the premium of this displacement leg, right? So price is going to want to rebalance this. So what am I targeting? This is one for your notes. If you ever see a sweep of the sell side, price is likely to go and target a breaker block, right? So I am already in with my how I trade is I'm looking for a breaker block inside a premium of this leg, right? I know, sounds messy, sounds crazy, but if you take the sell side, immediately look for a breaker block in a premium in the previous displacement leg, right? Sounds complex, but you guys will eventually get the hang of it, so it's all cool, right? And what do we have up here? We had buy side here and we had buy side there, right? And what do we have just above that? We had a 5-minute volume imbalance, okay? So I was initially targeting this breaker, but had comfort that there was a 5-minute volume imbalance just above it, and we were looking to purge these two buy sides, right? So price was running to target those. And what do I mean by the breaker? So the breaker was found on the 1 minute, okay? And the 1 minute, we can see it here as clear as day. It's the top candle of this range, right? And so that's what price was drawing to. And so if we look at the London session, what does it do? It runs from 3 o'clock all the way up to here at 5 o'clock, right? Easy, easy, easy to be seen, right? And then what are we looking for? So we are looking for price, once it's hit its PD array, to show signs of reversal. And what does it do? It immediately shows this displacement leg lower, taking out this swing low. So this then becomes a market structure break. Now, we are looking for price to move back into a premium for us to then take a leg lower, right? For us to then come and run down the price, right? To take it back down into a discount, right? It's, it's like tag, as ICT calls it, right? So this is exactly the same model as I taught yesterday. Exactly the same model. So we get the purge on the buy side, right? We get a displacement leg lower, we take a market structure break, and price fails to get above the median threshold of the discount range, okay? You could have taken that entry and ran it down into this fair value gap, right? Why do I pick that fair value gap? Because if you take the range from 3 till 5, what do you have, right? It falls within a discount, okay? So that sums up the London session. Now, the AM session was tricky for many, and me included, and I didn't take any trades because my bias was actually bullish. So I was actually expecting us to come and run these equal highs, possibly see consequential encroachment of this 1 hour order block before dumping, right? But it decided just to dump off the block, right? Fair enough. So I'm not going to pick up this that piece of price action, but what I will pick up is this, right? So we have this displacement leg here, right, which runs back into the weekly gap, right? And so when we see it move out, we are looking for setups for us to consider lower, right? What is this? This is the classic bull flag for a retail mindset, right? But what do we know? We know that price is it's looking bearish, right? It's looking bearish. It's looking like it's wanting to head lower. So what are we looking for? We're looking for price to return into a premium for it to run lower. But we already know price is heavy. So price retraces, moves up, but hits the equilibrium point of this displacement leg, and then retraces lower, okay? And then we get, it bounces off the weekly open, and we take the consequential encroachment of this wick, and this was your entry to go short, right? And again, showing that it is heavy, it's heavy, and price is moving down, okay? So That sums that piece of price action up. We then had this huge move down in the lunch period, which I won't cover, but I will cover this section. So this is a box setup, right? And I do like this trade, and I'll take this off for a second. So what I like to do is, if I see this period of consolidation, so I have a high and a low, and I see price move out one end and then move out the bottom. I like to see it move into the median point for then a continuation down, right? So in theory, it looks like this, right? Price moves up, moves down, moves into the median, rejects down, right? And that's out of a period of consolidation. So you see this period of consolidation moves up, moves down, so it purges both sides, moves back into the range before moving down, right? And this was a trade to take. If you didn't get in up here, you could have taken this entry here, right? Could have taken this entry here. And then price moved down, and what was I targeting? Consequential encroachment of this hourly block as my initial target, right? Which is this pink line which runs across the chart. And what do we get once we hit consequential encroachment of that hourly wick? We get another period of consolidation, right? And so I took another trade here, and I was looking for price to fail at the 3 p.m. algo. So price moved down, and as you know, I trade by time. So I trade on the algo time. So price moved down, failed to break above this fair value gap, and I threw a fib across this range that it created, right? And so I take entries off the 50% off consolidation, all right? And so there was multiple reasons why to take this trade. It couldn't get above consequential encroachment on the hourly at the 3 p.m. algo, and it was it already pinged the 50% of this consolidation phase, right? So we've been collecting more shorts, or the market had been collecting more shorts in this premium of the consolidation range, and then broken and couldn't get back above, right? And then this is where it gets slightly technical. So this range itself can have an implied move. An implied move is times that amount, right? So this line here is 1 times implied move. This here is 1 times implied move. And this line is 1 times implied move, right? 3 times implied move of that consolidation. And so I was targeting this range down here. But what was my first initial target? My first initial target was this daily order block. So the top of the wick of this daily order block. And that's sat here, right? At 40.86. So that's 2 times the implied move of that consolidation, right? And so that's where I got my trade out, right? So I got in up here and I got in out here. Now, this blue area, so at this area, I'm already looking for price to reverse, because as we know, price likes to work in the power of 3, right? So we get the open, we get manipulation, we get distribution, and then we get the close, right? So that's the power of 3. And that leaves a daily candle, which looks like this, right? So you have the body, right? Then you have the wick out each end, right? So you have the open, the manipulation, the base of the candle, and then a retracement, right? It's a power of 3. So when you get down to this level, I'm already looking for reasons for it to close, and we're already at 330, 340. So I'm already looking for price to reverse, especially as we've had such an aggressive move down, right? And we've hit the order block on the daily, and we're just about to hit the body, okay? We've hit the top of the wick, and we're looking at the body as a potential target once it broke through that. So what am I looking at? I was looking at, not only did I have the 3 times implied move, which it hit it to a tick, right? We also had this breaker block on the 1 minute. So if we go back here, this candle here is a breaker block. So that blue shadow is the breaker block, right? What do we also have? This leg here, it's in a discount of that leg, that range, right? So this range here hasn't been properly balanced at any point. And so price is going to want to come back and fill it, right? So inside of that OT zone, we had the breaker block. We also had the daily order block, right, which is, we know is a strong draw. And we had 3 times implied move, which is heavily extended, okay? So this is, your area of where price was reaching to for you to then take a reversal trade on the opposite direction, for it to close up the 4100, okay? And so this, I just want to pick up on this model here, right? So this is a V-shaped continuation that I have using ICT concepts, right? So if you run into a PD array, which this is, PD array is an order block, and you're looking for a reversal, this pattern is strong, right? So you have the leg down, the leg up, and then you get this displacement leg higher, and it leaves a fair value gap, right? Before taking these highs. That is your entry when price returns into this fair value gap for it to then run higher, right? It's a V-shaped continuation pattern out of a PD array, okay? Displacement leg higher, displacement leg lower, displacement leg higher, returning to the fair value gap above the order block, bang, price moves up, okay? So that is going to be it for me today. I hope that covers everything, and you've you've taken something from that. It was a very tricky day to pick your trades, but it was one to stay patient on, and if you timed it right, there was some lovely moves in there. So that's it for me this evening. Again, as always, if you found this useful, please consider smashing a like and hitting subscribe. It would mean the world. And until next time, trade safe, and I'll see you soon. Cheers, bye.